So, you want to start a business in India, but you're not sure where to begin? Maybe you have heard about the opportunities in India's massive and growing market, but the setup process seems confusing. What kind of company you want to establish? What are the legal requirements? And the most importantly, which option is best for your business? Well, here's the thing. Choosing the wrong structure can lead to the higher taxes, unnecessary restrictions, and even legal trouble. But don't worry, because in this session, I'm going to break it all down for you. We will go step by step through the 5 main ways a foreign business can enter the Indian market. I'll explain the differences in the taxation, operational freedom, and the legal requirements so that by the end of this session, you will have a clear understanding of which structure fits your business needs. So let's get started. Private limited company, the most popular choice. Let's begin with the private limited company because this is a route that 90% of the foreign businesses take when entering India. But why is this the most preferred option? The biggest advantage of private limited is a limited liability. This means that as a business owner, your personal assets are protected. If something goes wrong, you are liable for the amount you have invested in the company. Unlike sole proprietorship or the partnerships, where personal assets can be at risk, but in a private company gives you extra security. Another major benefit is full business control. Once you set up your private limited company, you don't need to seek approvals from the Reserve Bank of India of every business decisions if your company is under the approval route of the FDI policies. You can operate independently, enter into contracts, take out loans, and run your company just like any Indian businesses. And then there is a tax advantage. Private limited companies are taxed at 25%, which is lower than some other options available. When you are running a business, keeping your tax burden low is critical, and this structure helps with that. Now let's talk about the basic requirement to establish a private limited. First, you need at least 2 shareholders. These shareholder can be individual or even a corporate entities. However, there is a limit. You cannot have more than 200 shareholders in a private limited. If your company grows beyond that and get listed on a stock exchange, then becomes the public limited company. You also need at least 2 directors to run the company. One of them must be the Indian resident, meaning they must have stayed in India for at least 182 days in a previous financial year. This is an important rule to keep in mind if you are a foreign entrepreneur planning to start a business in India. And here is a good news. There is no minimum capital requirement to start a private limited company. You can begin with whatever amounts works for you, which makes it a flexible option. Now, while private limited is a great choice for the most businesses, what if you don't want to create a new company from scratch? What if you just need a local office that represents your existing foreign company? That's where a branch office comes in. Branch office, an extension of your foreign company. A branch office or a BO is exactly what sounds like. It is an extension of your foreign company in India. It means you are not forming any new company from the ground up. Instead, you are simply opening a branch of your existing business in India. This option is useful for the foreign company who wants to sell products, offer services, conduct research, or manage Indian operations without setting up a complete separate legal entity that's a private limited company. A branch office allows you to do all of this without incorporating a new company under the Indian law. But here things get tricky. A branch office is heavily regulated. First, you need approval from the RBI to set it up, and your parent company must have a net worth of at least $100,000 and a profitable track record of past 5 years. Another big drawback is the tax rate. A branch office is taxed at 40%, which is significantly higher than the 30% that private limited companies pay. If you are looking for a cost-effective way to operate in India, this might not be the best option. And here the important restriction: a branch office is only valid for the 3 years, and after that you need to renew it with the RBI. Because of these limitations, most companies avoid setting up a branch office and instead go for the private limited companies, which gives them more flexibilities, lower taxes, and easier operations. Now, let's say you are a law firm, a consulting agency, or an accounting business. In that case, there is another option that might be more suitable for you, that is the limited liability partnership. A limited liability partnership, best for the professional services. A limited liability partnership is a different form of private limited because it is governed by the Limited Liability Partnership Act 2008, not the Companies Act 2013. Unlike a private limited company, where the company structure is strictly regulated, an LLP is more flexible. It is formed by signing a partnership deed, which defines the responsibility of each partner, the amount of a capital of each contributes, how profit and loss shared, the dispute will be resolved. You need at least 2 partners to start the LLP, but there is no upper limit on the number of partners. This makes LLP ideal for the law firms, consultant, accounting firms that works in a partnership structures. The corporate tax rate is 30%, which is a little bit higher from the private limited company. But there is one key restriction: LLP cannot be publicly listed on the stock exchange. This means if your company grows and you want to raise a capital from the public, an LLP might not be the best choice. If your goal is not to conduct a business in India, but just to have a presence, there is another option, that is liaison office. Liaison office for market research and representation. A liaison office is not a business entity in a traditional sense. It's purely used for a market research, brand representation, and acting as a communication bridge between the foreign company and the Indian entity. The key thing to note that the liaison office cannot generate a revenue in India. If you are not planning to engage any commercial activity and just want to explore the market, this might be an option. However, like a branch office, RBI approval is required. The foreign parent company must have a net worth of at least $50,000 and be operational for at least 3 years. Finally, there is one more option, a project office, which is only for a specific projects. A project office is set up for a specific project in India, usually construction, infrastructure, large-scale engineering works. Unlike the other business structures, a project office is temporary and must be closed once the project is completed. Here is what you need to know, that is RBI approval required. Just like a branch office and a liaison office, you need approval of RBI of India to open a project office. Foreign funded projects only. The projects must be financed by the foreign investments and awarded to the foreign company. Higher tax rate. The corporate tax is 40%, same as the liaison office and the branch office. Must close after a project completion. You cannot use a project office for a long-term business. If you get another project, you must apply for a new project office separately. A project office is ideal for the foreign companies handling specific contracts in India, but it's not suitable for a long-term operations. If you need an ongoing presence, a private limited or a branch office is a better choice. If you are still unsure about which structure is best for your business, I am offering a free consultation to help you make the right decision. Whether it's setting up a private limited, getting RBI approvals, dealing with the tax and the compliance issues, I can guide you through the process. Just email me at praveen@hanaadvisors.com. I will personally connect with you and discuss your business goals and business needs. That's it for today's session. Let me know if you have any questions in the comment. Thank you.